Alright, so in today's video, I'm going to be talking about entries and why you should not have any type of limit orders. So, entries. No limit orders, okay? The reason why I'm saying no limit orders is because these zones, all of these supply and demand zones, they only hold 15% of the time. So, when you just learned, today I just learned supply and demand. That does not change anything. It does not make you, it does make you a better trader, but when you see all these people on social media trading supply and demand only, just know that they're not profitable. Like, they're not showing you results for a reason. They're not showing you their track record, nothing for a reason. They don't want to show you that, I'm making this much this month. They don't want to show you that because supply and demand zones, they only hold 15% of the time. That's why I made that support and resistance video, because that support and resistance, you can mark them out anywhere and they will always react off as support and resistance zones. Like, that goes for supply and demand. Prices will always react, but it won't hold. They only hold 15% of the time. So, with confirmations, right, you can avoid losses if the zones give no confirmation. All of these supply and demand zones do not put a limit order. I see a lot of people doing this. After a demand fails, they always mark out the next supply zone and then go short. So when this demand zone fails, they look for supply zones. You cannot be trading purely off supply and demand zones, right? Limit orders do not work. If you guys see someone providing signals and then they're just telling you, limit order hit, TP1 hit, TP2. That does not work, okay? There's a reason why they're selling signals instead of actually trading. There's a reason why they're using a demo account, alright? Limit orders do not work because if you enter a trade, look, if I took a trade here, right, there's a high probability that, one, it won't hold because there's no confirmation, right? The way we trade is structure, supply and demand, liquidity, and then confirmations. Again, if there's no confirmation, there's no trades. In this case, right, there's no confirmation. If you put a limit order, you can get stopped out before the trade runs. Whereas if you wait for the zone to get wrecked a bit, like just a wick, and then you get the confirmation to go in, you enter, and then you can have the stop loss at where the liquidity low was. That's way better than taking a risk entry, getting stopped out before it runs, and then blaming yourself. Like, if you're a person who has had this issue a lot, then this is the video where you change that, okay? You stop doing that. If we look on the right side of here, alright, this is more sustainable. Even though like the risk to reward is lower than this one, like this is what, a 1 to 6. This would be like a 1 to 4, 1 to 3. Now, but I want the high, the risk to reward, like in the beginning of the video, of this course, when I showed you that, the power of risk to reward, right? I didn't mean 1 to 20, 1 to 30, because that is not sustainable. Anyone showing you a high win rate with high risk to reward, they're all capping, okay? They're not being truthful. With entries, again, no limit orders, no confirmation. No confirmation, no limit order. Over here, we lower the risk to reward, because obviously the risk to reward doesn't matter. The only thing that matters is that our plan works, okay? If the plan follows through, that's all that matters. So over here, the stop loss would be around 0.5 to 1 pip below the zone. Now, this is only to factor in spreads, and I only do this once price has developed. So once price comes in and then rejects, comes out, body close outside of the zone, so entry above zone, waiting for clear rejection before taking. When there's a candle rejection outside of the zone, we then have the stop loss below the zone by 0.5 to 1 pip. It's better if price comes in, has a little wick below the zone, and then rejects. That will then mean that it has taken out the liquidity already. That would give us a more high probability setup when there's a high mitigation. But if that doesn't happen, then we'll just keep a 0.5 to 1 pip stop loss below the zone. So even though we lowered our risk to reward, we have a higher chance of winning, okay? So I'm going to show you this trade that I lost $240 on. Well, I basically lost 300 after the charges, which is the fees. So I took a trade here, like the confirmation. I want to zoom in. So if you guys can see this black rejection candle here, so this was the zone. So I marked out the zone here. I had there's a breaker structure here, a fake breaker structure, and I marked out the zone here. So both this white candle closed within, and then this second black candle right here closed within the zone as well. But this black candle here closed outside of the zone. All right, it closed outside of the supply zone. So that's when I took the trade. So I took the trade, and then it slipped me in around here, because I'm not going to name the profit, but this made me miss out on a lot of money, because even though it slipped me out for the entry, I then got stopped out. So this was my stop loss, right? My stop loss was around here, just above the zone, right around here. Spreads took me out. Not only did spreads take me out, but slippage also occurred, which took me out here. So instead of losing around 200 or I think it was 150, I lost $300 after fees as well. That's why I'm saying that you need to have a stop loss 0.5 to 1 pip below the demand zone or above the supply zone, because having it at the within the zone, because that's where the candle was at the lowest, or having it just at the zone, like for the demand zone, just below the demand zone, it doesn't work. Okay, you need to have a little buffer, 0.5 to 1 pip stop loss below the zone, not just at the zone, but below it. Okay, you need that little buffer. What I want to say before I continue with the entries is that you never want to trade off the 1 minute. And what do I mean by that? What I mean is, after we get the 15-minute like chalk FBOSS or boss FBOSS, we then look for these confirmation entries within our 15-minute zones. You never want to trade off the 1 minute. Look for 1 minute chalk FBOSS or 1 minute boss FBOSS, and then look for entries right away. All right, that's not how it works. You can't do that. You need to have a 15-minute structure alignment, and it will be better if it aligns with the 1 hour and the 4 hours. But in my case, I want you guys to do the same. Look for 15-minute structure first. If 15 minutes is chalk FBOSS, wait for the zone, okay? Don't go on the 1 minute and then look for 1 minute chalk FBOSS and enter, okay? The whole point of the chalk FBOSS on the 1 minute, which I will show you here, is to confirm our 15-minute zones. If there's no 15-minute zones and it's all 1 minute structure, avoid the whole setup, or else you'll have like 7 losses before hitting that 1 win. So even though if that 1 win is a 10-20 hour trade, it's not sustainable long term. You're going to have months of really bad and heavy drawdown. You're going to lose your funded accounts. But that's for this section. I want to show you the risk entry versus confirmation entry first. So the risk entry is taking a limit order, okay? If you take a limit order, like I said in the beginning of the video, you will get stopped out before it runs. It's not sustainable. And again, these zones hold 15% of the time. That's why we need a clear confirmation before we enter any type of trades. So for confirmation entries, like the generic idea is you wait for the zone to mitigate, and instead of taking the entry here, you'd wait for a chalk. So once we got a liquidity sweep or a change of character, a breaker structure, and then a breaker structure to the downside, which gives us a clear chalk, we then wait for the retest of a supply zone. So all this would be on the 1 minute, but the reason why it's on the 1 minute is because it's reacting off a 15-minute zone. So once we got this 15-minute zone, we're looking for a reaction. This is what a reaction is. Whereas over here, we just took a trade limit ordering the zone. So even though it could work, it's not sustainable long term. You need to confirm your zones to have a better entry and more confirmation. So going down here, this would be like the high probability confirmation. We look for a 15-minute zone after 15-minute structure has developed. And then we look for, like, let's pretend this is a chalk FBOSS zone, chalk FBOSS structure, right? You can then look for a chalk FBOSS on 1 minute. And that is the A+ high probability setup, okay? Don't believe me? Freaking test it out. But going back to the main part of the course, once we had this, a zone here, this breaker structure, the zone, you look for a chalk, an FBOSS, meaning liquidity, and then a supply zone. This would be a very high probability A plus setup. So when you're noticing that, when you're doing this on the 1 minute, you're seeing that it plays out, that could literally be because it's aligning with a 15-minute structure and supply zone. But you never knew because you never zoomed out. So most of your wins is probably because of this alignment and you didn't know. But now that you know this, you could avoid so many losses and then take a high probability setup from here. So, over here, this is the last confirmation. Okay, so I haven't really touched on the last confirmations, but this is where it gets really deep and important, because after a chalk F boss, I see people a bit confused and they take a limit order. They're saying, nah, everything's aligning. I need to take this high probability setup because everything's aligning. But once we come back to the supply zone, a lot of mentors will teach you that, this is the confirmation. Now you can limit order it. Do not limit order it, okay? The reason why I'm telling you this is because the last confirmation in candlesticks is this. There's a green bullish candle here and then a green bullish candle here, right? Even though like the first green candle closed outside, it wasn't a bearish candle, right? We needed a liquidity sweep. So we could say that the liquidity sweep was over here, like, price came in, even though a lot of people would have entered here, there was a body close within, and then you could take a trade. That's what a lot of people see it as, but for me, I want to wait for another candlestick. Now, the reason why I want to wait for another candle is because I want a clear bearish rejection. Like, this red indicates that price is pushing down hard, okay? So once we closed outside bearish with a red candlestick, outside of this zone, that's when I knew that, okay, price is clearly rejecting. This is the rejection candle. This is a clear bearish body candle close outside of the zone. That's when I'll take the trade. I'll enter here with a stop loss above the zone, which is at the wick. So if the candle wick is outside here, I'll have my stop loss outside the zone, but within the wick. This could still be 0.5 to 1 pip stop loss, okay? Because that means that all the liquidity has been swept. There's no more liquidity. But whereas if we took a limit order from over here and had a stop loss about here, we would have got stopped out. The reason why people will take the limit order here is because they're seeing that if we take the order here, stop loss here, the risk to reward would be a 1 to 10, whereas this one would be like a 1 to 3. Again, lowered our RR, but the probability would be higher because of the confirmation. Waiting until we have a clear rejection for shorts gave us a more high probability setup. And that would like literally ease your mind. Whereas if you had a limit order here, price is here, you'd be staring at the charts the whole time or stressed out before it hits and then getting stopped out. That would just stress you out. Whereas if you just set alerts here, waited, played some Valorant, played some games, and then waited until the alert hit, got this confirmation, gave us a clear rejection, and then taken it, you would have eased your mind to take a better entry. But yeah, that's the last confirmation for the Chalk F boss confirmation. Any special confirmation? Alright, so before we continue with the special confirmation, right, I want to touch base on the Chalk F boss on the 1 minute. So when I say that it needs to align with the 15-minute structure, a lot of people don't even check the 15 minutes. What they do is they zoom out and they say, price is bearish. Looks like we're headed down. Right? There's a demand zone here. Looks like price is headed down. And then what I see is, look, Eddie, Chalk, F-boss, supply zone valid. Imbalance confluence right here. Right here, imbalance confluence. Let's take it. The reason why I avoided this UJ setup was because on the 1 minute, yes, there was a Chalk F-boss on the 1 minute, imbalance, supply zone. I don't care. The reason why I don't care is because the 15 minutes, if you zoom out, right, it's so bullish. Look, breaker structure, it's heading up, not even touching the demand zone. It's just headed up, breaker structure, headed up. Don't worry about the zone, it's a unmitigated wick. But what I'm seeing on the 1 minute is a lot of people saying, let's counter trend, let's short into the demand zone. Alright, you can counter trend, but you need to understand that the win rate with counter trending is really low. Like, statistically speaking, from all the data we've gathered, and I want you to personally gather this yourself as well. Counter trending is very low probability. Spotting a random 1 minute shock FBOSS is very low probability. You're not getting the highest, you're not getting the most out of it, okay? It doesn't make any sense to trade this. And I'm seeing a lot of people trade this, getting stopped out and then not realizing why they're getting stopped out, why they're losing the trade, taking gambles. So I'll just show you what I mean. Play this out. So this is what I'll mark out from what I and a lot of other people would see as well. Oh, liquidity. Okay, so tapped in. Alright. Now this is where a lot of people get confused because they're thinking that this is a valid setup, okay? They think that this is a very valid loss. Oh, mitigation. Broke above the zone with a candle, a wick, making them valid, okay? Closed outside the zone, giving us an entry. Because they already gave us the full mitigation and the liquidity sweep. People enter there, they'll target this low. I'll show you what happens. Goes down. Alright, cool. Up 1R. Comes up. Comes down. Mind you, the break even would be around here. Okay. Once this low breaks, that's when we go break even. What happens? We get stopped out, right? I'll show you something. This is what I mean. After we get stopped out, right? People think that this is a valid loss. To me, it wasn't a valid loss because the 15-minute was bullish. So because the 15-minute structure was bullish, I have my alert here, and I still have my alert here because it never hit. I'm waiting for structure. I'm waiting for price to come down here first, and then I'll look for a shock FBOSS. I'm not looking for a random shock FBOSS like this on the 1 minute. It made no sense to take the trade. On top of that, right? Because I want to be realistic. Once this trade failed, and then people saw that, oh, I got stopped out. This could have been a liquidity sweep. I'm entering right here. This is what they do. They enter another trade here. Stop loss right here. 2.5. Oh yeah, easy. Like the pips matter. 2.5 stop loss. That's fine. Same thing. They target down here. Oh look, 10R. Like if I lose, I only lose 1R. That's where you get tricked with RR. I'm telling you guys right now. The risk reward does not matter if your plan sucks. If you didn't follow the 15-minute alignment. So I played this out. What happens? Oh, what the hell? I got stopped out before it came down. So you guys see how it gave us a rejection right there as well, like that. So even though we got stopped out, someone would have taken another trade. So I'm gonna put this over here. This is one loss. This would be another loss, right? Open it. Oh, I got stopped out. And then when they saw that black candle, which you guys just saw before, they would have entered another trade here. And then they would have got stopped out again. So after this one invalid structure 1 minute setup, you would have taken 3 losses. And that would have been really bad on psychology. And then if you were risking 1%, you'd be down 3%. If you're risking 0.5%, you're down 1.5% for, no, not even. You're down 2% for the day after slippage, spreads, and commissions. So even though it says 3R for 3 losses, you're down 4R. You need, the next trade you need to make 5R to make back 3 losses. Because that 5R will account back for slippage, spreads, and commissions. Because after 5 trades, you're paying for a lot of commissions, yeah? That's not sustainable long term, having these 3 losses off this invalid setup, okay? So that's why I'm saying that the 1 minute isn't sustainable for structure. You need to stick to 15 minutes. And I've already made a video on that, okay? So you need to go watch it. Alright, so the last part I want to show you in this entries course is the special confirmation that I use. So the general idea would be a chalk here. So once we have an M15 zone, you look for a chalk on the 15 minutes. And I know that some people do this as well. Once there's a chalk here, they enter off the chalk and then have the stop loss above the zone by like 0.5 to 1 pip. That is also sustainable. That works too. I use that sometimes. I tell my students to use it because even though the risk reward is low, it's better because sometimes price doesn't come back to the supply zone or demand zone. So it's better to just enter off the chalk and then have the stop loss above the zone. Like your risk to reward lowers by a lot, but just understand that it's a very high probability, high win rate, and just better, more sustainable in the long term. But the only reason why a lot of people want to avoid it is because the risk to reward is incredibly low. You chase like a 1 to 4, like 1 to 4 with a 70% win rate is pretty good. Like you have a 70, like if you think about it, right? Like you're risking $100, like, or $10. Now let's say $100 in order to make $400, and you have a 70% chance of winning. That's beating the markets. That's way better than most of these unprofitable traders with 1 to 20 with a 10% win rate. Alright, if they have a 10% win rate, I'm telling you right now, a 70% win rate with 4R average or 3R average is way better than a 20R average on a 10% win rate. Okay, so that's how people normally trade, and my special confirmation is basically a chalk before the chalk. So I'll show you what I mean. This is a 15-minute zone. Okay, now we're looking at 15-minute structure, always having 15-minute structure. If this is a 15-minute zone, what we get is the first touch. Okay, once we have the first touch of the 15-minute zone, you don't take the rejection candle. You wait. You wait until the liquidity gets swept. So once there's a break of structure, or even better, if there's a wick, all right, if there's a wick and the body close outside, A+, like liquidity swept, done, easy, perfect entry. But let's say it's a break of structure to the downside, and then before we wait for this break of structure up here or a clean chalk, I'll wait for the candle close outside of the zone. So if the body of the candle closes outside, I'll just take the trade, have the stop loss below the zone, or make it a bit larger. But that's what I look for. Okay, instead of waiting for the shock, wait for the candlestick to close outside of the zone and then take the trade. So body close outside the M15 zone after liquidity gets swept. So liquidity sweep and then candle close above the zone. So you take the trade before the chalk. You can't wait for the chalk. If you wait for the chalk, that would be more high probability. But this is the live example I took. So there was a mitigation here. People would take the first entry here and have stop loss here. Your risk reward would be too low. So that would also be FOMO as well. So when you saw this reject, I know that people would enter here as well. The scale in. It's all just really bad psychology. But for us, instead of waiting for this chalk here, like this break of structure and then this change character here, we waited for this break of structure. So you see how like there was wicks outside of the zone, but it never closed. Okay, it wicked outside, but it never closed. It closed in. It closed in. Whack on here. Now I could have taken the trade here, but look, it never closed outside of the 15-minute zone. It just played around. Once there was a clear close, candle body close outside of the zone, that's when you take the trade, and then you have the stop loss below the zone. So yeah, that's the special confirmation. I hope you guys understood this whole video inside this course. If you have any questions with entries or confirmations, just ask the Discord, okay? But yeah, I'll see you in the next video.